Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson. We're going to make gold matter and silver, probably precious metals, really. I'm delighted to introduce all of you to Brian Chu. Now, Brian and I have known each other for a number of years. He spoke at our gold conference, and, quick heads up, the Australian Gold Conference is happening in Sydney from the 26th to the 28th of August. Go to goldevents.com.au and book your tickets right now. Brian is one of our keynote speakers. You can meet him in person at the event. Now, he started life as a private investor, and then he started sharing some of his views on hot copper, met Jordan Alessio, who some of you will know from ABC Bullion, and look where he is today. He's the precious metals editor for Fat Tail Investment Research. He is also the founding director of the Australian Gold Fund. And something I'm going to ask him a little bit about, ladies and gentlemen, is Gold Hub Australia. What's that all about? So he's all about gold, precious metals. And the reason I want to talk to Brian today is a lot of you out there feel very comfortable keeping either your currency, your devaluing currency. And by the way, it's budget day today, and they're going to be spreading the love by printing more money, which means that your dollars will continue, your Australian dollars will continue to be devalued. 3 words: you can't print gold. That was actually
That's
4. 4. You can't print gold. Anyway, Brian, welcome to Making Money Matter. Good to see you. Thank you so much for your time. Now,
hi, Kerry, and glad to be here. We've actually known each other for 5 years, and how much has the world changed in 5 years? I can tell you, it's been very strange.
it has been very strange, and I appreciate your time. I want to start back, if I could, Brian, and that is, I get a lot of conversations with people where they say, I'm not interested in gold, or I like gold jewelry. They literally, it's like the child that says, not listening, not listening. And I'm passionate about explaining to people in a way that I say to them, it's not difficult, but they're almost fearful. They're like, oh, the gold price is too high, or what happens if the gold price drops? But you and I both know that over time, gold will always hold its purchasing power. So I'd just love your views on, why do you think people don't get it?
It's a really good question you ask, because it's the same type of thing that happens across all ages. And that famous saying of you can't eat gold. And I'm going, well, that's a really stupid point, because can you eat dollar coins and plastic notes? You can't. So that's a bad argument. But the media and the financial pundits in the mainstream news will have you think that it's your grandparents who will own gold. We're well beyond that. We're into the age of paper currencies, cryptocurrencies, property, shares, bonds, but anything but gold, because it sounds uncool. Now, I personally, I regretted, you could say, not finding out about the hidden secrets of money, Mike Maloney's video, until I was about 30 years old. Now, had I known when I was 20, I reckon I'll be much better off, and I'm sure it would definitely make a difference with my family circumstances and all that. And I reckon anyone who finds out about this hidden secrets of money right in plain view would probably agree that gold has done very well in the last 20, 25 years. Now, it's not investment advice, but I'll show you the data later on, and I'll let that speak for itself. But like gold's been around, and gold will be around longer than we will be here. Long after we're dead, gold's still going to be around. And I think it's going to have the same purchasing power. And we'll definitely talk about that.
What is the difference between purchasing power and investing? Because I think a lot of people don't get that differential.
Now, I've never had someone ask me that. And it's a really good question too, because the difference between investing and purchasing power is, investing, you're taking risk. You're talking about buying shares. You're hoping that it'll go up, but it can go down. But purchasing power, we're talking about, say, how many apples you can buy for. So if you work for an hour on the same job, how many apples can you afford today, 5 years time, and 20 years down the track? You have to actually compare something that doesn't change and see how much something can buy, and that'll tell you what purchasing power is. And case in point, think about when we were children, back in the 70s or 80s, how much $1 could buy us. I remember we could go to school and we can buy not only our research, but also our lunch with a $1 coin. Today, $1, well, what can you buy? Very little in a school canteen. Definitely won't be enough to keep a young child happy for the rest of the day. They'll need a $5 note or maybe even a $10 note. That's purchasing power slipping away when it comes with our plastic currency. But what happens with gold? The same bar of gold bought a Roman man his toga. In the 1930s, it bought him his business suit and even enough for a meal. What about today? $3,500, $3,600. That's a really damn fine suit we're talking about, or many, many fine dinners in even the best restaurants.
Yeah. Yeah. So let me, because I think it is important for people to understand that it is not that difficult for them to get access, if you like, to, well, first of all, by the way, ladies and gentlemen, blatant plug here. There is a free, and I mean free, no cost to you, Why Gold, Why Now, on the first evening before the actual conference starts, hosted by Bullion Now, the wonderful Michael Pepper. We're putting together a 2 hours for you to come in and understand all the different ways that you can get gold. And by that, I mean protect your purchasing power. Now, Brian, I know you'll be there.
Yeah.
How important is it for people to get educated?
Now, I have been in the higher education industry for 20 years, and there were times when I would go off script teaching my students in finance, economics, statistics, actuarial studies, risk management about the hidden secret to money, simply because I believe they need to get started early. If you have a good financial foundation, I mean, work hard by all means, but gone are the days where you can have a family that could feed itself with one paycheck. Now they're struggling even with two paychecks. You got a mortgage, you want a trip every now and then, you want your clothes, car, petrol, etc., everything. And if we get down the wrong, if we start off on the wrong foot, you end up condemning yourself to a life of poverty. And I'm not making a hyperbole. Once I show you a few graphs about what the average Australian income gets you, and how many years you actually need to pay it, how long it takes to pay off a mortgage, and you look at the relative price of a house and gold, you'll see why it would be a great idea to at least come to Eureka 2024, I believe that's the name of the event, and find out. Even if you come out and go, "No, this is not for me," at least you were there, and you had the benefit of hearing us out.
Yeah, closed mind, ladies and gentlemen, like a closed parachute, doesn't work well. Let's have a look at some of the slides, because that fascinated me what you just said.
Yeah, sure. Let's do that.
And you're always about the numbers. It's the data, isn't it? The data that shows you.
Yeah, I let the numbers do the talking, because sometimes a good story, get a good story, but pack it with numbers, and I think it could make something come alive. So I want to call this time to make gold great again, simply because gold's been great, but people don't see it as being great. And let me start off with this. The Aussie Battlers, we've heard that term for many decades. The typical Aussie Battler who's trying to feed his family, feed his or her family, deal with the unknowns out there. Now, even in those days, back in the 90s and 2000s when I was growing up, I mean, those were actually good times if we actually look back at what's been happening in the last 10, 15 years. This graph shows you the average annual earnings for a New South Wales worker. And it's gone up about, I think 200, almost about 150, 200% from 1994 to now. So about $36,000 to $100,000 a year. And in gold terms, it's actually gone down. If you look on the right-hand side, back in the 90s, a typical Australian worker would come back home with about 60, 70 ounces of gold a year. It went up to as much as 100 ounces in the late 90s and early 2000s. Those were the golden years. As much as most people would say that, is that really true? That's the numbers. Back in the 90s and 2000s, a household could afford to perhaps pay off their mortgage in about 10, 15 years, maybe even have a trip overseas once or twice a year. And that would be a typical family. Most people were in the middle class. Now that's gone down to as little as 35 ounces of gold now. And that's really scary because we're earning more in dollar terms, but we're actually able to afford less. That's why we got people, that's why we have dual income households. That's why you got people maxing out their credit card loans. Truth of the matter is the numbers don't add up, and that's pun intended. In gold terms, it tells you the entire story. We're getting poorer as the years go by, and it has been a silent robbery because inflation has made our dollar worth much less, and gold, in Warren Buffett's terms, he does nothing but look at you. He's right about that. He's wrong about everything else when it comes to gold. With due respect, Warren, but I say to you, you've done well with your stocks, but give people a go if they invest in gold and say something fair about it. In gold terms, our dollar is traveling much less. And if you look at the next slide, let's look at the median property prices. Now, if you look at this and go, but property prices have been going up. What are you talking about, Brian? Have you gone nuts? And I'm going, well, absolutely, absolutely. Property prices in Sydney have really taken off since 2008, 2009, just after the subprime crisis and our interest rates coming down from about 7% to 4% and then to literally 0%, 1.5%, I think to be precise. We're at the also 1% at the minimum. But either way, property prices have gone up, but not in gold terms. In fact, the Sydney median household apartment is just as affordable today as it was in the late 90s. Now, most people would...
And let me just make that very clear. This is if you were buying your house in gold bullion in 94 or today, it's approximately the same.
Yeah, that's right. And the houses were most affordable in 2008 to 2011, and also just before the subprime crisis when gold took a bath. And but I'm sure people didn't feel that houses were any cheaper in those times. That's because we're looking at it from the dollar terms. If you change your mind and focus on gold terms, then you will see that some things don't really change. It's just that our matter of perspective has changed. And I think people should really take a deep breath and look at that and ask yourself, can you find any other asset out there that has moved as in the same pace as a Sydney house or apartment? Maybe
well, I'll have to interrupt you, and I know it goes against.
Go for it.
Bitcoin's had a bit of a run.
You are absolutely right. I was expecting someone to say that. Bitcoin has, and in fact, that's the other reason that young people have have just pushed gold aside. And to be fair, I'm I'm not an anti-crypto person. I'm actually I'm pro cryptos because we shared a common enemy, and I think I talked about that in two weeks ago when we had that chat with Simon Lawson and Headley Wither. I'm not anti-crypto, and good for people who have made their money in that front. But how wild a ride is it in cryptocurrencies relative to gold, which takes me to the next slide on how gold's performed in the last 24 years in Australian dollar terms. Kerry, do you remember when you bought your first bar of gold?
Oh gosh. Uh, well, actually, I do. I do.
Hmm.
I don't remember the year,
Yeah.
but I do remember at the time I had to battle a fear factor. So I was
Hmm.
putting all my hard-earned savings into buying gold, and I remember the exact price. It was 1,640 Australian dollars,
Oh, wow.
and I bought the gold, and then it dropped back to about 1,200. I thought, what have I done? Then I was like, oh my God, what have I done? And
So this was
today, as I said,
2010,
yeah, that sounds about right.
2010 to 2011. Yeah.
And then I now look at it today, and this is what I want people to understand, that
Hmm.
the fear that you have, whatever the price is in Australian dollars, there will always be that moment where you think, have I made the right decision? But, and I'm sure you can talk about this as well,
Yeah.
you can look back over 25, 50, 100 years, and gold does what it always does. It will protect your purchasing power. So as I speak to you today, May 2024, price of gold in Australian dollars, which they never talk about when they do the gold price on the morning news. They always talk about it in US dollars. So you guys out there don't even understand that they're not talking Australian dollars, they're talking US dollars. So in Australian dollars right now, what are we, Brian? About 33,
35, 30, 35, 50.
35.50.
Yeah.
Again, Brian, people will turn around and go, it's now too expensive.
Yeah. And actually, when you bought your first bar of gold, it probably was about 2012. It was 1,600, and it fell to about 1350, 1360 in 2013. If you look at that graph, it looks like a blip in the radar, doesn't it?
Yeah.
And that's quite it's quite surreal looking at this. Now, if we chatted 3 years ago, the drop from 2012 to 2015 would have looked a bit looked a bit more significant. It's only because in the last 2.5 years, gold has gone up from 2,200 to over 3,500 that it's dwarfed the effects of 2012 to 2014. But mind you, it was a scary time, and I cut my teeth into gold a bit later than you, Kerry, in mid 2013, and I bought my first bar of gold in 2015 after enjoying a small run in the gold stocks. I went for the roller coaster ride rather than the merry-go-round. I wanted life on the wild side. Almost had a heart attack, proverbially, not actual wise, but that's because gold stocks were a wild ride, and I'll talk about that later. But what I'm trying to say is, gold has been a quiet achiever all this time. We heard lots of stories about how stocks have done really well, tech stocks, Nvidia, lithium, iron ore, oil, uranium. And now I think it might be the turn for gold and silver. But in the last 3 years, if you bought gold, you would have actually done very well for yourself. It has gone up about 55, 60%. And let that sink in. It wasn't the smoothest ride, but it certainly, I think, was a safer ride than those who made their money in lithium and tech stocks and Bitcoin in the last 3 years. Now, can it happen is it always guaranteed to be that safe? No, I don't think so. We've seen some wild moves in gold back in the 80s when it rocketed up to 800 and came back all the way down to about $200 an ounce and stayed there for quite a long time, all the way to 2007 when it started taking off. So that's gold for you. Now, how does that compare against the ASX ordinaries? Most people wouldn't believe this, and I had to rub my eyes and pinch myself to make sure that I wasn't dreaming. But in the last 25 years, gold's gone up by 600%, 650%. Aussie gold stocks went up by as much as 150%, and it's grinding its way up right now. But look at those moves in 2008 to 2009 when it dropped about 50%, and also in early 2020 when it dropped about 35% in a matter of weeks. So, I mean, all these people who love stocks, yep, some people have done really great. This is the index, so individual stocks may have done much better, and that's why people like taking their chances. And I always believe that you sometimes have to look at things in a longer perspective to appreciate the value of gold, and why I like having it as a foundation of my wealth in my family portfolio. What are your thoughts, Kerry, with stocks versus gold?
I think it's interesting, isn't it? I think that there's a lot of people out there that you said right at the start, there's a lot of people that are battling. There's a lot of people that are living paycheck to paycheck. And what I want to say to people is I want you to start looking at what I call your leaky buckets are, because your leaky buckets are all those subscriptions that you probably haven't necessarily watched for a while. Maybe you could walk to the gym instead of driving and using fuel. Now, there are ways that you can shore up those leaky buckets, and instead of just having those leaky buckets, which means that you are living paycheck to paycheck, tighten up a little bit and have a look at what you can do to invest in your money. And by the way, this is not financial advice. Neither Brian nor I know what your personal financial circumstances are, so you need to talk to a financial advisor. But I still believe there's a lot of people out there that need to understand. But Brian, my view on this is diversification is your friend, especially when you see, I can see the gap. But Brian, I do like the gold stocks because of the leverage to the gold price. And then I like physical gold because of its ability to protect my purchasing power. Now, when should you sell gold? If you have gold and you are going to buy something else, which is what I call a hard asset, don't go and buy a new car or something like that. But if, I still like property, Brian. But I wouldn't sell my gold unless I was buying something which was a little bit secure. Now, people are saying that Australian property is a bit frothy at the moment. Tend to disagree. Again, go back to diversification. But Brian, don't know what your views are, but I just think people have got to get better at taking action. I think since the credit card was began back in was it 40 years ago, you guys are tapping away, and you have no idea where you're going, and you're living on credit. Stop living on credit. Start understanding about investing, and start understanding about shoring up your leaky buckets and understanding gold and gold shares. That's my view, Brian.
Yeah. And also, I mean, in economic theory, we talk about consumption and investments, right? And that's a type of question that most people think about, is what to consume and what to invest in. And I think a lot of people are driven by the shiny advertising and marketing of the next product that will make you look great, give you a great experience, and make you go get ahead of the Joneses. But I think what's really important is people understand that you can spend as much as you want and more, but down the track, how happy are you going to be when the bills arrive, and when you when you realize that you want to set aside something for the children if you have children. And all that is, it just puts things into perspective. And I thought we might also talk a bit about gold and buying gold, shouldn't we? Because
Great.
a
Yeah.
lot of questions about this.
Yeah.
I mean, most people are aware that you can buy gold in on a stock exchange. You buy the PM gold, you can buy the gold ETFs, and that's what we call paper gold, because you might have a ownership of a share of the gold bullion that these ETF vehicles hold in their vault, but it's not guaranteed. There's a very big difference between buying paper gold and physical gold. In physical gold, you need to walk to a bullion dealer store or a jewelry store in some cases, and they will sell you gold bars, gold coins. That's different to gold jewelry, because gold jewelry, you're buying it, also you're paying for the design, you're paying for the rarity, you're also paying for other metals that might be combined into it. But gold bars and coins, there is a purity level, and the other thing is you don't have to pay GST if the gold has purities above 95%.
Oh, I
Um,
didn't know that.
yeah,
Above
yes.
95. Okay.
Yeah, I think it's 95 or 96%. I have to
Okay.
check again. But that's why a Krugerrand and the US American Eagle, they actually are a bit more expensive than the Perth Mint, Royal Australian Mint, Royal Britannica Mint, etc. gold and silver coins, because the Krugerrands and I think
And a bit
the
of a shout
Eagles,
out. Sorry, I got to stop
yeah.
you. And a bit of a shout out to our beautiful sponsors, the Gold Conference, Bullion Now and ABC Bullion, as well as PFT Refinery up here in Queensland. Sorry, Brian.
Yeah, that's okay.
Them as well, because there's plenty out there.
Yeah, there are. There are plenty of stores, and these bullion coins, you need to learn a bit about the different types of products available. The bars are usually pure 99.99 or 99.95% bars. Coins, you pay a little bit for a design for the year and for the mintage. And then you've also got the collector coins, which some people love buying. They're like stamp collections, and they're a different kettle of fish. Something which it's well above my pay grade to go into numismatics, and maybe carry somewhere down the track. I'll look forward to hearing someone that you bring in who's a numismatics expert, because that becomes a fun hobby. And I've also heard people buy gold nuggets, and the reason why gold nuggets are special is because no two gold nuggets are the same, just like snowflakes, and people are willing to pay a slight premium above it
There we
just
go.
to make it a gift
There we go.
item.
There's a little gold nugget.
Oh, there it is. Wow.
Yep. Because it's people look at it and go, it's jewelry, and I go, actually, it's not. It's a gold nugget, and it's
Yeah,
an investment. Probably shouldn't
it's
have done that on
money.
YouTube, but there we go.
Yeah, so you have different forms of gold and silver that you can invest. Well, I wouldn't call it invest. In fact, Bill Bonner, founder of Agora, the Agora back in the 1970s, he corrected me a couple of times and reminded me, you don't invest in gold or silver. That's money. You can invest in the gold products, which could be stocks, it could be contracts, it could be anything of that sort. So I'm just being very pedantic.
Let's finish off your slideshow, because I want to go back to full screen with you and I talking, because I've got a couple of points I want to bring up. So let's just finish this off, and then because we don't have a lot of time left.
Yeah, let's talk about gold stocks then. That's the more exciting part of gold investments. And here are three graphs where I compare the relative performance of gold, which is in the yellow line, the gold stock index, which is the producers and the late stage developers. That's the ASX Gold Index, the orange line, and the blue line, which is the explorers and early stage developers, are really specky penny stocks. And if you look at 2008 to 2011, gold stocks left gold in the dust. in those 3 years,
Wow.
even though gold went up from about $1,000 an ounce to $1,900 an ounce. Gold stocks really went to town. In 2012 to 2016, when gold came down in 2013 and fell by about 33% in the space of about 2 years, gold stocks tumbled very hard, 70, 75, 80%. And at one stage, and that's where I literally had my proverbial heart attack, I started buying gold stocks in mid-2013. And by December 2014, my portfolio was 75% down. And that was
Wow.
a portfolio. Individual stocks, some of them were down by as much as 90, 95%. I had St. Barbara and I bought them at 62 cents and rode all the way down to 7 cents. Luckily, I didn't sell during that time. And it was $2.50 in 2016. I didn't hold it all and sell at the top. I sold some on the way up and held them through to 20. Even now, not endorsing that company particularly, but I'm just showing how wild a ride gold stocks can be. And with explorers, they were nuts. Like if you look at what happened in 2016 to 2020, it was the explorers' turn to go nuts in 2020. From March 2020 to September 2020, the index went up 260%. But individual explorers, some of them went up by as much as 50, 60 times. And Chalice Mining was one of them. It was, I think, 16 cents on the 23rd of March 2020, and it peaked at about $11 in November 2021.
I remember them well
oh,
because they came to the gold conference at
yeah.
that time, and I remember thinking they were 26 cents, and I did nothing. Alex Dorsch, I'll see you at the Rickroll Symposium in July, but oh my goodness, what a wild ride that was. Now, here's the thing, though, ladies and gentlemen.
Yeah.
You will never go broke taking a profit. You'll
Yes.
never hit the top. You'll never figure out where the bottom is, but you will never go broke taking a profit.
I totally agree with you. And I think a lot of people make that mistake with buying gold stocks, and they think that's it's a buy and hold investment, just like you can buy and hold gold and silver. Those who are subscribed to my newsletter at Fat Investment Research know that I like to take profits sometimes a bit early.
Yep.
And I like to be patient when the time isn't right. But you can't hold it across a gold price cycle, which comes every 3 to 5 years. And finally, to wrap up, this is where we are right now since 2021. The gold's gone up 45% since the beginning of 2021. Gold producers are finally making their way up after having a pretty bad run for the first 18 months. And gold explorers and developers, there's still plenty of room for them to make an entry. And therefore, I urge people to have a look at the gold space. And always say, start off with a foundation with precious metals, physical, and some ETFs, and then work your way into the gold stocks, but always seek financial advice and manage your risk, because it is a roller coaster. But I believe that we're into the fun part and the rewarding part, and I certainly look forward to seeing people and hearing their stories of their successes in the many months to come. So that's my slideshow.
Thank you, Brian. Thank you for that.
No problem.
There's a lot to take in there, ladies and gentlemen. I don't want to overwhelm you with too much information, but Brian, Fat Tail Investment Research, I want you just to give a brief description about what you do, because you do the research.
Yes.
You do the letter, they get the information. Yeah.
So if people can check out the Fat Tail website, fattail, fattail.com.au, and you can check out our newsletters. What we do is we have 2 precious metals investment newsletters. the entry level newsletter is the Australian Gold Report. There I guide you in building a precious metals portfolio, precious metal physicals, ETFs, established gold stocks, gold producers, and we've slipped in about 2 or 3 smallish explorers and early stage developers to give you a bit of the experience of the spiciness of this space. Then we have the premium newsletter called Gold Stock Pro, and that's where we get into the highly speculative explorers and developers. I'll be perfectly brutally honest with you. It hasn't done well in the 3 years that I've been there. We've only started seeing some significant results. We did take some profits last year on companies that also dabbled in lithium, and 1 or 2 producers that managed to rally along with the other producers. But the explorers and developers, we're now starting to see a few of them take off. One of my stocks in there has rocketed 400% in the last, 500% in the last 6 months. And another recovered about 300% from its bottom in February. So it's a great time to get in. It will set you back a little bit. We're talking about the Australian Gold Report is retailing, I think, about $499, but we have a special offer where you can come in at $199.
Oh, wow.
The Gold Stock Pro normally retails for $29.99. Every so often, we will provide a special, but you have to get in at this time, I believe, if you want to still buy some of these companies at close to rock bottom prices. There are other ways to get in touch with me. You can check out the Australian Gold Fund, goldfund.com.au. That's where I share some of my research since 2019, as well as a couple of videos that I do with Better Investment Research, Making Money Matter, and hopefully in other channels as I branch out. Finally, there's also Gold Hub Australia, Gold Hub, goldhub.com.au. I'm trying to set up with 2 of my friends, Australia's answer to kitco.com. Great website, Kitco. Barry Kidd has done fantastic work for the precious metals investment community around the world, but I'd like to take the ball and do it in Australia as well.
Wow, he's a busy guy, ladies and gentlemen. And you know what? I'm not going to put him on the spot now.
Yeah.
I'm going to talk to him off screen. I'm going to talk to Brian off screen and just see whether or not we can do some sort of a little special for you guys out there for Gold Stock Pro. No promises, but I'll talk to him off screen. And if I can get you something, I'll pop it in the notes below. So check that out. Make sure you go and register at goldevents.com.au for the Australian Gold Conference, Crown Towers, Barangaroo, 26th to the 28th of August. And for all those, the excuses out there, I have a job and I don't want to pay money. Well, Monday night, it's free. Brian will be there. I'll be there. Lots of information, lots of exhibitors, lots and lots and lots for you to learn. And then right now, there's an early bird. It's $199. That's it. $199 for the full 2 days. We've got so much. Plus, we're going to give away some gold and silver. So it's going to be fun. It's a great time to be in gold. Last words go to you, Brian, as we finish up.
Looking forward to coming to the Australian Gold Conference, Kerry. It's been a pleasure, and I'm really glad that Making Money Matter is doing its bit to build up the Australian community of precious metals investors and people who will be able to preserve their purchasing power for themselves and for their future generations. Wish them all well, and God bless.
God bless to you too, Brian Chu from Fat Tail Research and, as he said, Gold Stock Pro and the Australian Gold Report. There is so much information there. You can follow him on Twitter as well. I think you're on Twitter. What's your Twitter handle? AUST Gold Fund. I don't post too often in there, and it's usually a little more about what's happening in current affairs. Precious metal stuff, find me on Fat Tail Daily, daily.fattail.com.au. I write every Tuesday. There you go. He's too busy writing to start getting onto the X. All right, Brian, great to see you. We'll have you back and we'll see you in August at the Gold Conference.
Thank you.